following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. I was out Thursday and Friday. Apologize for that. It was up on Lake Lanier, north of Atlanta. What an awesome spot. But, man, it's wild. The lake's about 15 feet down, forest fires everywhere. Kind of no rain situation. They never even got the hurricane kind of rains that came through here to replenish the place. So interesting situation to watch up there, but hope they get some rain soon. But beautiful area, barring that, and just incredible fishing, striper fishing. If you guys are into 40-pound stripers, they got them there. Actually, it's wild. Let's take a look at the VIX. First of all, we don't talk about the VIX a lot, but I had personally done some, it was almost just a prophecy that you couldn't ignore. We had some low volatility situations. Banger and Steve Banger and Joseph Jong had come on and we talked about, what's the play here. You really got almost a double in the VIX since we were talking about that. And if you play this right, you can play it in a very leveraged fashion, like just load up on some lottery tickets, a very high risk reward. What do I mean by that? By just kind of going and buying out of the money calls when you have a low volatility situation. And again, we've talked about, you can make your whole month, year on those types of trades. But I personally did pretty good on this one. So I'm doing that right now. But when they start reaching for the volatility and you start seeing some of the option prices just blow up incredibly well. Thursday, in fact, there was a pretty serious move up right on the close. And I personally had some orders kind of way out there and we're getting hit on some 3850s actually on the VXX options. But if you look at what's happening now, we had, obviously yesterday, Comey came out and didn't specifically say anything about the Clinton Foundation investigation and all the things that are possibly shoes going to drop on that one. But, a Hillary decent news situation that came out, I still think you got to buy the VIX here. We're kind of opening up sub 20. There's a lot of different ways to play this. You can do some debit spreads, calendar spreads on this particular product. And I don't think you're going to get, even with that news out and a lot of the things that we've talked about, I don't know if the deep conviction factor has been put into the numbers very well when they do exit polls on, people that have already voted or some of the polls that are out there now with, current percentages one way or the other. This thing that happened yesterday doesn't mean that Hillary's going to win. So as a trader, I know the odds have kind of increased. I've looked around on some betting sites, as I always do, at some of the percentages that are in, kind of leaning her way now. But I don't, Tuesday night's a long ways off. I know that's only 36 hours or so, but a lot can happen in the next 36 hours, and you can't really factor in that she's going to win and the market really liking that. So I don't think the volatility is really going to die down here. And I actually think you get a chance, going back to my original thought of bringing you into this conversation, you've still got a chance, I think, to do a volatility play on the north side here. And I think, this kind of relief thing that happened 7 or 8 days down or 9 days down, whatever we were in the S&Ps, big gap up. I actually think you got to be looking at selling these S&Ps, and the easier trade possibly would be, I think, buying the VIX here. So how do you do that? You can go into the VXX options, which are the ETF. They're about 50% of the move on the VIX itself type scenario. I think what are we gapping down this morning on the VXX? Let me pull that up. And, a calendar spread may be in order here. Let's take a look at this. Okay, so we closed at around 30, a little south of 38. There was that Thursday reaching kind of situation on the VXX there. I left some part of a debit spread on myself here, but we're gapping down and starting to kind of like ramp up again here. So we're trading about 34.85. It looks like, if that's kind of a general area. And if you look at the options on it, you got some opportunities there. Gapping down, we're down in here. So reached the weekly unfair lows on the VXX there on last week. But if you look at the daily, this is kind of where we're at down in this area. And we opened up actually around 33.80. So we actually opened right at the daily unfair lows on the VXX and have kind of rallied up. I don't think this is over. And I still think, you got opportunities in the VIX to go north. And that being said, if we look at the S&Ps, we're getting a massive gap up. I don't have to tell you guys that. What do you do with the S&Ps here? I don't think. I mean, I know you've got some breakage of 240s here, but I think we can easily go. And we retested around the 202 last night, but I don't think anybody needs to get. I mean, we're gapping up about 30 S&Ps this morning. Yeah, maybe even higher. I think the risky trade is to get long these things, and I think we're going to settle back here, and the VIX is going to move up. So just keep that in mind as you enter the trading day. Yeah, somebody then saying smoke's bad. I'm assuming you're talking about in the northern part of Georgia there. It was unbelievable. I drove through that yesterday, and you couldn't. It felt like a cloudy day. There was so much smoke in the air from some of the forest fires up there. Helicopters dropping water everywhere. It was wild. But otherwise, a very beautiful area. Really, really nice how Western North Carolina. Yeah, I went through, went the mountain way to go down to North Atlanta. It was very beautiful. Let's take a look at a couple other things. Let's take a look at crude really quick. I went through Franklin yesterday. Let me get my chart back. Sorry, guys. There we go. I didn't take the left turn at Franklin, by the way, Gator. I kept going west like an idiot and stayed on 64. I missed the turn going down there, so I ended up. There's a town called Hiawassee, and then south of there, Helen. Look up Helen on Google sometime. Interesting town. They converted completely over to an alpine village look. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to hit crude really quick, and even though we do have, get this back up, new profile attempting to appear today, I see zero reasons. I mean, there are reasons to take some shorts off here. If you've been short, we've been talking about staying away from the long side, talked about initial targets before I did do the shows on Thursday and Friday of 46.33 from up top, around 51.98. You can see how that worked out. We didn't even slow down at that unfair low on the weekly. Got the close below. So now, in my opinion, you've got your selling points. Yeah, if you sit tight, maybe wait for this new profile to attempt to appear, or to finish out, excuse me, not to attempt to appear. We may get some dual inflection points around 46.23. So what I'm trying to say is that close below, go back and retest. You got to just kind of say, there's a lot of signs on the board here where the trade might just be stalling. And it's kind of a wait and see on crude. Okay, let's take a look at gold. I am, Joey had talked about this thing kind of doing a submarine below 1252 and being able to possibly sell 1278.5. Those were kind of, broken, those ideas. We got up to that 1300, 1307 area. Those weekly infra lows were coming off, obviously, today. We were compressing up into that area before the announcement yesterday. So what do you do with gold now? I still think you got a massive buying opportunity around 1278.5. I like how this thing has acted. And I don't think this political thing's going to just dissipate in the next 36 hours. I think you just got to brace yourself for extreme volatility. Nobody knows what's going to happen. I mean, if you go back to some of the primaries, I mean, the polls were really considerably off when it comes to Trump, and that deep conviction part of the vote. I mean, anything can happen. So going back to the VIX, on that note, VIX is continuing to edge up here pre-market, even though big gap down. I think you're going to see this thing getting at least back up into the 21.5 today. Let's take a look at the dollar. You know, the dollar, I was playing around with this on Friday around this 97 area, kind of a tenuous situation. It didn't close right, so I opted to be out of the trade, and lo and behold, we bounced right off those 97 areas in the dollar. We had talked about that was the kind of back the truck up area, but I was too much of a chicken to stay in it myself. If you guys bought that and just kind of hung tight on it, kudos. Let's take a look at the Shanghai really quick, and I want to bring up a kind of a China ETF. I mean, this thing's starting to really show signs that it wants to move north, but I want to pull up the MCHI ETF. Just want to point out that, you know, we've come down into kind of a maximum buy area on this ETF involving China, 45.60, and I'm looking at this as a decent buying opportunity on the M8 MCHI. Let's take a look at the XLV. All right, and you know that, you know, the Hillary, let's see where we're at this morning. Is this a real print, 67.21? Still don't see any massive reasons to buy this. I mean, I think you got to look at this as an option play. Try to buy some lottery tickets on this. Trump, you know, steps in. We could have some decent moves up, as Steve Banger was saying, in that healthcare sector. Let's take a look at the utilities. Hadn't looked at this in a while. You know, rates. You know, let's just see where the notes are first. Let's pull that up so we can get a temperature there. 10-year. I don't think, you know, I don't think there, like we've talked about, there's really no leverage to trade this. That being said, going into the utilities really quick, very interest rate sensitive group. We explored the entire fair auction last week of a long-term weekly profile, 49.45 to 45.68. You know, what do you do with this now? I think you can nibble here around 47.68 for a little bit of a trading opportunity on the XLU in general. If you're trading the ETF, it's not going to be anything that moves quickly, I don't think, right now. I think the interest rates are just kind of stuck in the mud. Let's take a look at Apple. All right, well, got our wish here on Apple. Got below 114.82, never really retraced back up into it very well. I still think this thing can just completely implode. 103.90 could be in order here. We're getting a gap up, obviously 110 this morning. It looks like we're trading. You know, I think you got to be selling a lot of instruments this morning. You get that gap up. And again, I think the volatility is going to creep in and start freaking some people out again. Let's take a look at the XLE. All right. Looks like we're printing about 68.5 this morning. Here's the XLE. Came down and kissed that 67.31, bouncing up a little bit. Don't think you got a lot of leverage trading the XLE in general. You've got to drill down into the stack here, going back into the scanner, taking a look at the XLE. I think you got to be looking at opportunities, kind of buying the strong here. Let's take a look at Chesapeake. Ooh, all right. Let's pull that up on our CHK. The reason I like this one is because, you know, this is kind of Custer's last stance. It's a cheap stock, $5.09. We've reached those weekly unfair lows, and I think easily we can rattle back up into 577 and higher. And probably going to be more closer to the $6.23 range on Chesapeake. I think you got a really decent pullback on this one. And if oil at least consolidates a little bit here and retraces back up into that 46.23 weekly unfair low, I think you're going to have some of these oil stocks lift. But again, you want to be not trying to find the ones deeply on sale. You want to have technical reasons and areas to play defense. Taking a look at SWN, this little puppy. It's just, the close below 1211. That was the stake in the ground to kind of sit tight and wait on this one. And not a lot of reasons here, except maybe a retracement back up into 1035, but can't count on that. You much better serve the trading gods to buy the strong of this sector. Let's take a look at XOM. We're going to talk about Exxon when we come back, folks. We'll be right back off the break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to look at ExxonMobil here. I had a couple of emails about this. Yeah, I mean, when you're looking at, you could look at this a couple of different ways. But again, you're trying to figure out if you're going to try to pick up some things, some deals, so to speak, as oil's come back tremendously. And we might get that retracement in oil back up into 46.23 before we start some more downtrend moves. I think you got to, 84.69 looks like it's printing pre-market. So we're kind of back above this scene right here. But again, you know, I think you got better things to look at on the long side right now. Okay. And by the way, I want to thank you, Tom. He sent me this finally after 2 years. Been begging him. The Art of Timing the Trade. Nice book. He needs it on audio, so you can just keep reinstilling some of the things in that book. Really cool book, though. But thank you, Tom. Let's take a look at a couple other things that we usually look at. Let's take a look at silver. All right. So, like I talked about gold, I think, you know, you still have some legs in this, in the fear factor going on with some of these, you know, the golds, the silvers, the VIXs of the world. Silver's right at, again, you know, profile appearing below price action. You got a chance to play defense here, 1812 or 18, what is that? I can't see anymore. Yeah, 1813. I think you got a good chance for silver and gold to bounce here. Gold might retrace a little bit more before it starts trying to bounce, but I think you've got some good stakes in the ground here on silver. I don't know how Larry feels about that. I hope he feels the same way. That would make me feel good. Copper, this thing blew a gasket, and you know, we talked about 214 was a big situation. Joey actually talked about gold and copper possibly, you know, migrating south a little bit, but again, this is what stops are for. We try to show things even when they don't work out the way we had talked about them. But getting back above 214, we had talked about that would be the area to look at getting long, not trying to pick a bottom and you being the low print here. Let somebody else figure that out. And copper has just really now started to move above weekly unfair highs, 226. Larry is feeling good about silver. That is outstanding, because I feel the same way right now. I think you got a nice retracement back into that 1812 area, and I think you could pick some battles around there safely. And that's the big thing. You know, a friend called me this morning. He's like, "Man, what's going on? The election?" You know, that's one that's sitting in a ripe area when you're looking at different instruments. I'm still a huge fan of trying to buy the VIX on the dip, obviously, but silver is really in a ripe area right now. And again, you know, it's all about playing defense. How do you minimize the risk? And I think you got a good chance there to minimize some risk. And it's nice when things are in an uptrend, then you get this gap down, and you do get some kind of friendly situations sometimes off of that. All right. Let's take a look at Tesla. Here we go. All right. So read some more things that Elon Musk is talking about. A global wage. That's his next thing. He's I was talking. That's based on AI, automation, and things like that moving forward in the next 10 to 15 years. So many people being possibly put out of work. I was talking to my brother-in-law this weekend, excuse me, about AI, and that is going to get really scary soon. He's oversees quite a few different plants that they're, looking into the 3D printing, the automation, the AI, and how do you gauge where that thing's going to go? There's a lot of permutations you can really think about, and they're not, any of them aren't really that good. But Tesla, going back to the stock price, 194.47. Looks like we're printing about 194.47 pre-market here. So we're kind of at the 240 unfair highs. I'm not a huge fan at all of being long this stock, so I'd like to find opportunities to sell it. I think you're kind of at a precipice again where you've got an inflection point you can play defense against. This is the 240s. And I think the market's going to just kind of peter out here. I don't think we're going to just continue to move north on the S&Ps. The VIX might take care of that, and Tesla might be the benefactor of some market retracements here. You've also got to take a look at this as, if I'm a portfolio manager and there's this impending thing in 36 hours and I've gotten this gap up, just a freebie to just kind of get rid of some things before, having to take the shot on rolling the dice on the election itself. I think some people are going to be coming in and selling this. We may get a little bit of a bump up of some covering right on the opening here, but I just don't see this thing doing one of these 500-point up days on the Dow. And if you guys have any thoughts about the election or the fallout from it, please call in. This is obviously an interesting topic to a lot of folks right now. Okay, Johnson & Johnson kind of got 116.40, got up into the unfair highs on the current profile. 116.33. I think you've got a chance to whack this one. Again, I'm not a huge fan of this stock. Again, just get kind of a free lift up this morning. That's nice to see on that stock. The British pound. J&J, Johnson & Johnson. Okay. There's the yen. Let me go to the British pound here really quick. I got to reboot this server, and we're going to be right in business here in 2 seconds. All right. Well, I don't know how that happened. Here we go. You guys still seeing my screen? I hope so. Okay. All right. Let's take a look at the British pound. And we talked about not trading inside the box on the relatively tight profile, 121.58, 122.83, just waiting to see what got that close above, that retest, and a pretty serious move up. So what do you do with this now? So that was, one of the reasons not to trade inside that profile there. The good news is we reached that weekly unfair high, 125.09. That was the targets on the breakout on the upside that we talked about, and we're kind of coming off of there. We're going to talk about this a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Trying to get Joey on from Hong Kong here. See what it's when you talk to people overseas about what's going on over here, they're stunned. I mean, what the heck? It's just as shocking overseas, or more so than it is here, about the political scene. And somebody was talking about, is this a political den or trade den? Right now, actually, those two things kind of go together. So that's why we're talking about them. We've had a couple of usual suspects this morning. I want to hit one. One that I was looking at, that the maximum back the truck up buy point on Microsoft 58.50, kind of got that. It's exploded a little bit this morning, 59.55. So I don't think you can really go wrong buying this. I hate to say that because then it'll go straight down. But Microsoft has kind of given you the big bust out and then the kind of pull back to the weekly and for highs. Still real high on this stock no matter what happens. I think they're in a great spot. And I think we have Mr. Zhang on from Hong Kong. Joey, you there?
Hey, John. How you doing?
Good. How are you today?
Excellent. What an exciting day again.
I know. What's
I'm just so
the
happy
trade?
there's volatility back in the markets.
I know.
After such a dull year, basically.
Oh, God.
Yeah.
of
really nothing happening for, dull summer at least. Of nothing happening. But yeah, there's a lot of volatility, and we have an exciting day coming up tomorrow.
Right.
So looking forward to that.
What's the trade in your opinion? Where do you kind of devote capital right now? Or do you just wait this out and kind of trade the fallout? What is there any trades right now beforehand you can kind of imagine or do here?
I'm just thinking of the healthcare stocks, and that's one area that I've been thinking about. And the healthcare stocks are down a lot because of Hillary. And I just think that if Hillary wins, it'll be a relief rally. And if Donald Trump wins, it'll be rock and roll rally. So either way, I think the healthcare stocks go.
Okay.
Yeah, I wouldn't say that about the rest of the market if Donald Trump wins, but
right.
But the healthcare stocks have been depressed because of, I guess, Democrats and Hillary Clinton, talking down the whole sector and all the profits and stuff like that.
Yeah, everything in healthcare is really just a coin. I mean, it's just up in the air relative to. I mean, obviously, yeah, I don't. You don't have healthcare in the U.S., do you?
What healthcare? You just have a lot of expensive.
I know. That's what's why. I mean, I haven't looked at the XLV options, or any really, healthcare options lately, but I think it's worth a look. There's probably some incredible volatility plays out there for these right now. And it's,
Maybe a sell a put here, sell a put and buy a call. I mean, it's down from 75. XLV is down from 75 to 66. That's a pretty big move just in the last 3 months.
right.
That's a pretty darn big move. So,
And something simple on that. I mean, even simplifying it more, and some kind of debit spread maybe, just in case there's an explosion, but not really. And kind of, a lot of times you can do a debit spread, almost calendarize it too. So maybe you're kind of getting the short term move, but also kind of collecting some on the long term in case things don't work out right, and mitigating the risk. But this is definitely a sector that's kind of wound up right now, for sure.
So back in February, the lows were 63. We're at 67 right now.
Mm-hmm.
I don't think, we should get back to the area of February. So that's one. If I had to pick one battle to fight, I'd probably make a bet on that one. I think the other thing I wanted to mention was the copper.
Okay.
I think a few shows ago, one of your audience asked about copper when it was trading right around the 205, 206 area, and I just said, look, it's going to be really hard to break that level, and it's got solid support. It's rallied all the way up to 229, 230. So I think right around here is also some resistance as well.
Yeah, we had talked. I remember you saying that, and getting above 214 was going to validate a lot of that. Just kind of technically.
230 now it's a great move from 205 area. So right. I would tend to really try to take some chips off if you're long, and I think the economy is going better, but the rest of the world I still question whether the economy is going to continue booming. So,
can we talk about 3D printing a little bit, because you were big on that?
Yeah.
Can you throw out a couple of symbols there, because this is something my brother-in-law and I were talking about this weekend, and that was his. He's like, man, that's just going to start real. They're getting that finally really together now. What were some of the? Go ahead.
Triple D is one of the main things. Let's see.
Ooh.
And what was the other one? 3D printing. I forget what the other symbol was. Yeah, so Triple D is the one that I look at. There's one other major one. I'm sorry.
Not a lot of reasons to buy Triple D right now, technically, but yeah.
No. We're still kind of in this area of these guys just. There's not enough things that you can print at home that actually make sense. Meaning, you can. It's not a commodity. It's not a household product yet. It's mainly for
industrial
use, and these guys don't necessarily have that market. They are partly in that market, but you have a very, very fragmented market. And any new entrant, new player can come in and disrupt the whole thing. So, there's 2 listed companies, and both of those companies don't have a strong grasp of the market.
Hey Joey, can you hang out for the last segment?
Yeah, sure.
Okay, thanks guys. We'll be right back. We'll talk about SSYS when we come back too.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We've got Joseph Jung on with us from Hong Kong, and Joey, I forgot, man, it's later there now. I forgot you.
Yeah.
We're digging into your sleep areas. It's the daylight savings.
Yeah, lucky I work with the U.S. market hours.
well, listen. Just to wrap up, we got about less than 4 minutes here. So SSYS, another 3D stock. This one's technically kind of broken too, just like Triple D, obviously. I see, bottom of the profile on the day, 15.99's the next chance to pick a battle on the downside. But do these things do? I mean, what happens with these particular products? Do they? Is it time to try to pick them up on sale or
I mean, the problem is there's too many companies doing 3D printing products, and any small startup,
right?
Yeah, and any one small startup can actually just go and completely come up with something new that will disrupt the whole thing. So, I guess, and because these companies aren't really well cashed up, if they were, they should be buying the heck out of, any of the small startups like Facebook did and Google. That's how those guys got, they just bought up every competitor and then put them together. But now these guys aren't really well cashed up, so they can't do that. And so they basically went up from 2010 to 2014 on hype and hope that everybody was going to have a 3D printer in their house. Obviously, that didn't happen because you can't really print anything useful yet. As in, you can't really print something to use right now. You can print some novelty stuff, but nothing that you can actually use every day. And I printed my first thing the other day. I made a little kind of Lego-looking block. It took me 3 hours to print. It was nice to do. It was pretty cool, but it took me 3 hours to print one little 2-inch Lego block. So
I hope you weren't watching it for 3.5 hours as it was doing that.
I did watch it for a while. It was pretty interesting, but
man, exciting Hong Kong.
I know, I'm a little weird, but let's go on to what ES? Did you want to look at the S&P?
Yeah, I mean the question is this morning is, does this thing continue to kind of move up, or was this a gift for a lot of people that were hoping to get out of the market before the election night, 36 hours away type thing starts, some of the numbers start coming in? Is this just a chance for people to get out of their longs that were just kind of stuck in the last 8 or 9 days, or is this something, do you think, that could have some follow through?
We're pretty close. We got pretty close to that. We're pretty close to the 200-week support, 200-day support moving average, which is right around 2070.
Mm-hmm.
We got down there, and that's some pretty good support. So unless this market has a serious breakdown, I don't know. It's tough to say. Obviously, we got the election, the most uncertain election we've had in the history. We've dropped 9 days in a row already. I don't think, I'd be crazy enough to just go in head first and buy everything. But I don't know that things are going to fall apart afterwards either. I don't see how things are going to really fall apart,
Well, listen, thanks for giving us an answer. Hey, listen, thanks for coming on the show today. And guys, we'll pick it up again tomorrow. Trade light.
Take care.
Okay, thanks, Joey. Goodbye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.